Will America's second round of the Paycheck Protection Program avoid mistakes of the first? Senate Republicans and Democrats reached a deal on Tuesday to approve an additional $310 billion in Paycheck Protection Program grants, as many small businesses missed out on the US government's first round of PPP, which ran out last week. Many bank workers will once again be put on 24-hour shifts to cope with the volume of applications, but many are imploring both banks and government to do things differently this time around. The first round of PPP saw Wells Fargo unable to deliver any loans on the first day it opened, whilst Bank of America received criticism for denying loans to those who didn't have a credit account. Research from Morgan Stanley reveals that despite PPP being intended for smaller businesses that are severely affected by the pandemic, at least $243.4 million of the total $349 billion ended up in publicly traded companies' pockets, many with market values already well over $100 million. Bank of America, JP Morgan Chase, US Bank and Wells Fargo are all being sued by small business owners who are claiming these big lenders favoured companies seeking higher loan amounts over them. This means the second round of PPP has a few things to work on, namely lending to those most deserving businesses first and being ready with the paperwork from the start. Oak North's Chief Information Officer, Sean Hunter, highlights where some of the gaps in the first round emerged. He says the Small Business Administration didn't give banks an absolute certainty that these loans would be forgiven by the government. Hunter thinks there is a real problem with digital capacity of banks. They're just throwing humans at the problem, he says. They're taking people away from a lot of operational areas to administer these programs, but there's also a lack of digital capacity in government. He adds, "It's not like a bank connecting to MasterCard, a provider which has tremendous capacity. SBA's IT system has seen very little investment for the last 20 years, so you've got banks with tens of thousands of applications, and each application is taking a human being 45 minutes to submit." Hunter also thinks it's highly likely that after this crisis there'll be an investigation into all banks assessing whether they use these government programs appropriately. He says, "It's entirely possible that some banks are thinking, oh well, I'm going to put this loan into the government program and just shut my eyes." Regulators and banks alike will closely scrutinise the scheme itself. Hunter thinks it's highly likely many banks will still be left to deal with loans which are in theory the responsibility of the government. There will be lawsuits, he says. The clincher for a more successful round will ultimately come down to the level of clarity between banks and governments and the level of connectedness between their IT systems. It will also come down to banks' attitudes. The SBA's new guidelines say applying businesses must certify that the loans are necessary and that they cannot tap other sources of money. Banks will need to respect these guidelines to avoid what's happened this time with public companies such as Shake Shack and Ruth's Chris Steakhouse handing millions back. For more fintech and coronavirus updates, visit our website at fintechfutures.com.